Well, first of all, I think obviously the data has been showing an on-track recovery in China, and I think that has been painting quite a positive outlook for the equity market for the second half of this year. But I would just have to say the recovery path has been quite uneven. With some of the very diverging recovery among different sectors. So I think that's it's something that I would suggest investors to pay attention to.
Do you find it interesting that the private gauges on the manufacturing and services side are doing well directionally, and perhaps on the manufacturing side outperforming the official gauges, which are essentially a representation of state activity in the region, which is more directly supported by stimulus injected by the authorities? Can you reconcile that gap?
Yeah, well, I think the whole recovery, from the private sectors or the economy as a whole, has been a positive surprise since April when the market started to reopen, and we have been closely monitoring how individual companies are recovering, from different scales, and also how they are being aided by, the fiscal policy, and I think still, I mean, this is for the first time since January that we are seeing, more earnings upgrade than downgrades, which I think is particularly encouraging. But I think overall speaking, it just depends on, how we're, really looking at different companies level. Because I'm pretty sure for the second half or maybe for the rest of this year, there will still be a very uneven performance divergence and also performance contributions to the market.